Hey everyone, welcome back to Corporate Decoder. Today, CareCloud Inc. just filed a current report, and I'm seeing some interesting moves in their investor relations. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its earnings, and we will break down what that means for shareholders. So, what we have here is a Form 8K filing from CareCloud Incorporated, which is a regular report for companies to announce major events that shareholders should know about. This particular report comes out on the 6th of August 2026, and it is mainly about their financial results. Basically, the company is telling us about their performance. They issued a press release on the 6th of August 2026, which is attached to this filing. This means that any important information about their earnings or financial condition is in that press release. Think of it as the company's official announcement to the public about how they are doing financially. Then, on the same day, the 6th of August 2026, CareCloud also provided slides to go along with their earnings presentation. These are also attached as an exhibit. This is common practice for companies. They release earnings, and then they have a presentation, often with slides, to walk investors and analysts through the numbers and talk about their strategy. The key takeaway here is that these filings are just pointing to the press release and the slide presentation for the actual financial details. The 8K itself is more of a notification that these documents are available. So, while the 8K doesn't contain the raw numbers directly, we know that the press release and the presentation are where the meat of the financial story is. Now, looking at the broader context for CareCloud Incorporated, ticker symbol CCLD, they are in the healthcare sector, specifically health information services. Their market cap is around $108 million, with a price to earnings ratio of about 19.5. The current stock price is $2.54, and it has a 52. Week range between $2.04 and $4.01. They have a significant workforce of 3,650 employees. Recent news has shown some insider activity, with a director being granted restricted stock units. We've also seen analysts commenting on their first quarter report earlier in the year. Institutional investors like Vanguard Capital Management LLC and Hillsdale Investment Management Inc. hold substantial stakes, suggesting confidence from larger players. Let's dive into what the press release and presentation likely cover based on typical earnings reports. Companies usually highlight their revenue growth, profitability, and any key operational achievements for CareCloud, which is in the health tech space. This could include things like the adoption of their software solutions, improvements in patient engagement, or efficiency gains for healthcare providers using their services. We need to look at their revenue growth. If it is increasing, that is a good sign of market demand. We also want to see if their profits are growing or at least holding steady. A company can grow revenue but still lose money if its costs are too high. Their common stock is traded on the Nasdaq Global Market under the symbol CCLD. This is a key indicator of their visibility and accessibility to a broad range of investors. When a company like CareCloud releases earnings, we are always looking for trends. Are they beating expectations or are they falling short? How does their performance compare to the same period last year? These comparisons give us a clearer picture of their progress. For example, if their revenue grew by 10% compared to last year, that means they are bringing in 10% more money from their customers. If their net income, which is their profit after all expenses, also grew by 10%, that is a strong indicator of healthy growth. If revenue grew but net income declined, we would need to investigate why costs might be increasing faster than sales. The slide presentation often provides more visual data, perhaps charts showing revenue by product line or geographical region. It might also include forward-looking statements about their strategy and expected performance for the next quarter or year. This is where management tries to paint a picture of the company's future prospects. Looking at the exhibits, we see Exhibit 99.1 is the press release and Exhibit 99.2 is the slide presentation. These are the primary sources of the financial information for this report. The filing also includes Exhibit 104, which is the cover page interactive data file, a standard requirement for XBRL filings, allowing machines to read the data. In terms of financial tables, which would be within the press release or the slides, we'd be looking for key numbers like total revenue, this is the top line number, showing how much money the company made from sales. Gross profit, this is revenue minus the cost of goods sold, showing how efficiently they produce their services. Operating income, this is gross profit minus operating expenses, indicating profitability from core business operations. Net income, the bottom line, what is left after all expenses and taxes, earnings per share or EPS. This tells us how much profit is allocated to each outstanding share of common stock. If, for instance, the press release showed that CareCloud's revenue increased by 15% year over year and their net income increased by 10%. That would suggest solid growth but with a slight pressure on margins, meaning their costs might be rising a bit faster than their sales. If their EPEEPs also showed a healthy increase, it would signal that the growth is translating into value for shareholders. Conversely, if revenue was flat or declining, and net income was negative or decreasing, it would raise concerns about the company's ability to grow and remain profitable. In such cases, we'd look for explanations in the management's commentary about market challenges or strategic shifts. The fact that this is a current report and 8K means something significant happened on or around the 6th of August, 2026, that needs to be disclosed promptly. Given that it is tied to an earnings release, it is essentially the official announcement of their financial results and any accompanying commentary. Now, considering the broader market and CareCloud's position, the healthcare sector is competitive. Companies that can demonstrate strong revenue growth, consistent profitability, and a clear strategy for innovation are often rewarded by investors. The institutional ownership we see suggests that there are investors who believe in the company's long-term potential. If we were to look at a comparable scenario, think about other health tech companies that have reported strong earnings. They often see a positive market reaction, with their stock price increasing as investors anticipate future growth. However, if their performance falters, the opposite can happen with the stock price dropping. What I am actually looking for in these earnings reports is a clear indication of sustainable growth. Are they gaining market share? Are their new products or services gaining traction? And most importantly, are they generating free cash flow, which is the cash left over after all operating expenses and capital expenditures? This is the cash that can be used for debt repayment, dividends, or reinvestment in the business. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.